Hello everyone, and welcome on this video on how to trade Bitcoin futures using the Binance Futures trading platform. On this video, we are going to learn how to use the platform, as well as talk about the important aspects the platform offers. And we have a lot to do, so let's get into it. To open a futures account, log into Binance using your Binance account. Then go to the top of the page where you will find the Future tab. Click on Future and you will be redirected to the Binance Futures trading platform. On the bottom right corner, you will find the Open Futures account. Click Open Now, then a confirmation will pop out and your future account will be enabled. Binance Futures interface is almost the same like the Binance Spot Market interface. So let's take a look at the interface to familiarize ourselves with. Here on the top is where the future indicators are located. On the center is where the chart is. At the bottom is where the position, margin balance, orders, and transaction history are located. On the right side is where you can find the order book and the completed trade list. And on the bottom right corner is where the type of order and order submissions are located. Now that we are quite familiar with the interface, let's now put some funds. Now to start trading Bitcoin futures, you will need to have USDT or Tether on your Binance Exchange wallet because currently all products traded on Binance Futures requires a collateral in the form of USDT, and all their products are priced in USDT. Once you have Tether on your exchange wallet, you can go here on the transfer tab to transfer USDT from your exchange wallet to the future wallet. And by the way, transferring funds from your exchange wallet to your future wallet or vice versa is free of charge. You can see here your available USDT on your exchange wallet. Then enter how much you want to transfer and click transfer. After that, you will receive a confirmation of the transfer. And here at the bottom right of the screen is where you can see your available funds. Now before we proceed on how to trade, let's discuss quickly the difference of spot market to that of futures market. What is a cryptocurrency spot market? It is the process of buying or selling a cryptocurrency and having the exchange settled immediately. For example, if I was on a BTC spot market, I would be able to buy or sell bitcoins immediately and have a direct control over of my bitcoins, where I can send it to my own wallet or keep it on the exchange for the next trade to come. On the other hand, a cryptocurrency futures market, the trades are not settled instantly and does not allow users to directly purchase or sell the digital assets. Instead, two counterparties will trade a contract representation of those, and that defines a settlement at a future date. Binance Futures uses what is known as a perpetual futures contract. A perpetual contract is a special type of futures contract, but unlike the traditional form of futures, it doesn't have an expiry date and is priced based on the asset current fair value. So one can hold a position for as long as they like or close a position after making a profit. Now that we know how they operate, let's take a look at the benefits of trading futures versus spot. Why users trade futures contract? Hedging and risk management. Hedging is an investment position that is opened in order to offset a potential loss of another investment. Later on, we will also see how we can use hedging on our live trading. Leverage. Traders can enter a position that are larger than their account balance. This is known as a margin trading. On Binance, perpetual futures contract can be traded with a leverage that goes up to 125x. Short positions. Unlike the traditional spot market where you can only take profit when the market is going up, or in this case you're going long, futures trading allows shorting the market, where traders can also take profits even when the market is going down. Having these benefits of course comes with risk. Some of the common risks involved when trading futures are the following. Leverage risk. During a volatile market conditions, aggressive use of leverage may result in a substantial losses. Leverage does multiply your gain but also your losses. Liquidity risk. Future trading introduces the possibility of losses that exceed a trader's initial investment, in which your future account may be subjected to liquidation, where all your collateral or initial margin of a position is lost. Knowing the risk involved with trading futures is very important. That is why it is highly recommended to stay away from future trading if you are a beginner. Binance Futures platform have a testnet where you can test their futures platform. Register on the testnet and have a 100,000 USDT trading account. I recommend that you check this out first before doing the actual future trading. Now that we know how they operate, let's go with our live trading. Right now, I want to teach you the basic and later on, we will see how we can use the benefits of futures of trading. So to open a position, go to the Order Submission tab. The basic order types are the market order and the limit order. A market order is an order to quickly buy or sell at the best available price. Market orders are executed instantly at the current market price, meaning orders are not placed on the order book and that you pay the fees as a market taker. To use market order, just click on the market and set the size you want to trade. Then it will automatically trigger your trade on the current price of BTC. Let's cancel this trade as we don't want to pay more fee. We can also go short, but let's also cancel this. Limit order, on the other hand, is an order that you place on the order book with a specific limit price. The limit price is determined by you. So when you place a limit order, the trade will only be executed if the market prices reaches your limit price. And since your order goes to the order book, you will save fees as a market maker. So let's use limit price to place our entry. Click on limit, enter your entry price and your position, click OK, and your order will be created. You can check your order here on the Open Order tab. Once it is filled, your position will be open and will reflect on the Position tab. Market order have much higher fee compared to that of limit orders, but market orders are handy in the situation where getting your order filled is more important than getting a certain price. In other words, market orders should only be used if you are in a rush. Now let's examine the information on the Position tab. Here we have the symbol which tells what open position we are currently in. The symbol is BTC USDT and is colored green, meaning that it is a long position. If it is red, it means that the position is for short. Next, we have the size, or size of our leverage position. Entry price is our average entry price where our buy or sell of our current position was executed. Now this is where the most important thing to understand. We have here the mark price. It is a better estimate of the true value of the contract, and it may differ from the last price here on Binance. By the way, this is the mark price and this is the last price. Mark price is computed taking into consideration the average spot price from the other major cryptocurrency exchanges, as well as the funding rate, which is used essentially to force convergence of prices between the perpetual futures market. And thus, this is the price used in P&L and margin calculations to prevent unfair liquidation and price manipulation. If you want to go deeper and understand the technical side on how the computation works, I'll leave a link in the description. Next, we have the liquidation price. If the mark price reaches below this price when you are on a long, or above this price when you are on a short, your position will be liquidated or lost. Now again, the mark price is the one that is used here to calculate the liquidation, and not the last price on Binance, so take note of that. P&L. P&L stands for profit and loss, and it can be either realized or unrealized. When you have open position, your P&L is unrealized, meaning it's still changing in response to market moves. When you close your position, the unrealized P&L becomes realized. I also want you to take note of this, as this is very important. The primary driver for liquidation is your unrealized P&L, so the mark price is used to calculate your unrealized P&L to ensure that calculation is accurate and just. And last thing is the close position tab, where you can manually close your position either by limit order or by market order. So now we know the basic and how to execute an order. Let's take a look at how we can use the benefits we discussed earlier. So here we have the daily chart of Bitcoins, where we have this massive move to the upside and a pullback where it breaks out from this falling wedge. And right now it's consolidating. So let's see what the short-term chart is telling us. Let's go to the 1-hour chart. Here on the 1-hour chart, we can see that Bitcoin is forming a pattern or consolidating around this triangle and is now around its apex. So what we can do here is to take advantage of the benefits of Binance Futures. How I want to trade this is like this. I can see that Bitcoin made a possible false breakout down here, where it was bought back very quickly, and maybe this indicates a possible shakeout. We can also see the volume that the bought back have higher volume compared to the breakdown. So I think the possibility of going up is more likely than going down. But then again, I don't know where will Bitcoin go. But I know that a breakout is imminent for the upcoming hours. So what I want to do is to place an order where I think if it breaks, then BTC will break to that direction. Here on the chart, I think this is where if BTC break this level, then we are going to the upside. And this is around 9,500. And I also think that if BTC breaks again this level, or around 9,200, then it's going to break to the downside. So what I can do here is go on Binance Futures and put a stop limit order, where if BTC reaches 9,500, I'm going to place an order to go long at 9,505 and put half of my funds on this trade, or around 50 bucks. And I also want to take advantage of leverage, so I'll go 20x leverage. I don't go higher than 20x. I'm very comfortable at 20x leverage only. After that, we can now confirm our order. You can see here our order on the order tab. Now, what if BTC breaks to the downside? Then based on our technical analysis, if BTC breaks around 9,217 area, then I think BTC is going to break to the downside. So I'm going to place a short position order here on Binance. If BTC reaches 9,217, then I'm going to enter a short just below it, around 9,214, with a position same with our long position, or the other half of my funds, also at 20x leverage. After that, confirm our order and we can see them now on our order tab. What we did there was to hedge our entry, because we don't really know where BTC is going to break. But we know that BTC is going to break to the upside or to the downside. And with that, we take advantage of the benefits of trading on Binance Future. I'm going to watch this closely as we are very near at the apex of this triangle and a decision is around the corner. I personally think that BTC is going to continue its upward movement. But then again, we have hedged our trades, so we manage our entry. So that's it. I hope you guys learn how to use the Binance Futures platform, and if you think that you learned something, I appreciate if you hit the like button and probably share it to the others as well. And if you have any more questions, then leave a comment below. Once again, thanks for listening, and I'll see you guys next time. Binance, exchange the world.